MG. She been coming back? Oh, yeah. Look at that, right into a niner. We'll talk about that. We'll bring that up today in today's webinar. Niners all over the yard. So a little breather here. Not all that surprising. Let me shut this off, dude. Hold on. Meanwhile, everybody sees the screen okay over here? Any problems? Any complaints? Get them out of your system before we get rolling. All right, for anybody who's new or just hasn't been paying attention to anything, wallstreetjesus.com. If you go there, there's some information. You can learn a little bit more about what we do, what we look at on a day-to-day basis. Also a free trial, no credit card required. Lucci's got a course going. You got private Twitter there. Everything you may be looking for is on that site. And if you have any questions, you know where to find myself, Lucci, Charlie, and the rest of the gang. All right, but wallstreetjesus.com, if you're new, we'll quicken the learning curve. Because I have my own language, as a lot of you know, right? It's that Brooklyn Jesus slang that I bring into the mix. So that complicates things. But if you go to the site, they did a good job of breaking some of that down. All right, let's talk. First of all, I hope the majority of you, and I know a good chunk of you are members to begin with, right? Bookie Jive, exactly, Stephen. Most of you are members, so you attend these things. We get together quite regularly, you know, once on the weekend, once during the week. And if you're in the room, you hear me run my mouth all day. But if you're not a member, if you were on the Sunday webinar, which we opened up to everybody the last couple of weeks, more so because of the market conditions, and you guys could get an idea of, you know, how we look at markets. If you remember what we discussed on Sunday, okay, in a sense, it's playing out now, and I want to talk about how difficult it is, even when you kind of are prepared for a certain type of market, right? And then what I'm talking about is this. You're looking for either digestion, a pause, or some weakness, right? You tightened it up a bit, you took some stuff off the table, you raised the cash position, and now you're itching to buy. You know, you're itching to buy. And, you know, for me, I don't know about you guys, as far as my swing account and stuff I'm, you know, taking a position in, not day trade stuff, but the swing account mostly, I'm a lot more selective than my mind is designed to be, you know, and it's difficult. You know, I get frustrated when there's not, you know, any flow that meets my needs, and I'm sitting on cash and I want to buy something, I want to trade something. I mean, for example, today, and you know, this is a big deal for those of us who are degenerates. You would understand this a lot easier, but a day, you know, today, for example, I didn't trade anything, you know, and I was really looking forward to, especially into weakness, at least attempting a day trade, you know, attempting a squeeze, because, you know, kind of the backdrop and the setup has me conditioned to look for squeezes into any weakness. All right. And, you know, there wasn't any setup there. You know, we had one scenario where we had a downside niner, we stabilized, right? We found some support off that niner, but there was just no sweeper activity, no signs of any call sweeper activity. The flow went dead. So, you know, I made the decision to not even, you know, not get stupid and just play something just to play something, you know, and even though that was a day trade, right? Where, like I just said, the swing stuff, I like to be a lot more selective, all right? But if you were on that webinar Sunday, all right, just to backtrack, because let's be honest, you guys, I see a lot of you in the room talking about a gazillion different things. I don't know how you remember anything, but we spoke about how, this rally has been pretty powerful. Not everything has participated, right? There's been a chunk of names that really have caught the most aggressive type of activity, had the best price action, right? But there's been some big moves, right? You had high beta, you had biotech, that's where the sizzle was from the whole stake of this rally, right? It wasn't everything. So we discussed on Sunday that because of that, because of how far we've come and because of some of the moves in the retail riffraff favorite names out there, that we had some caution signs from our tactical sentiment indicators, right? So we're looking at two different bodies of sentiment readings. We're looking at extreme short-term stuff, and we want to look at that for better use of entries, right? Especially if you trade options, you're going to utilize that as a gauge, a compass to find better entries. And then the big picture stuff, which is intermediate term and positioning sentiment. All right. So even though our intermediate term and positioning sentiment still was favorable and supportive of this rally, on a short-term time frame, we got a little cooked. Okay, we got a little hot going into that Friday and into the weekend. And coincidentally, that lines up with, something else we bring into the mix, right? And we don't, especially myself and some of the key members that follow it and use it the way I do, we don't get too cute with these DeMark signals and stuff like that. We use it in sync with both sentiment and sweeper activity because they line up a lot, okay? So we had short-term tactical sentiment get a little hot and frothy. Well, those are two different temperatures, but you know what I mean, right? A little too bullish out there, right? And that's what the tactical sentiment tells us, that bulls were getting sloppy, okay? They were buying Amazon one day, they sell it 2 days later, and then they're buying Amazon even higher than where they sold it the next day just because they can't resist. It's going up every day, right? That's what the short-term sentiment indicates to us, that bulls are getting sloppy and the market could catch them if it wants to, and it usually does, all right? And then we run into this niner right here, right? You see it right there, boom, red, okay? And in simple English, same thing, okay? It's just an upside exhaustion signal, right? Where buyers have a tendency to get tired or run out of ammo, okay? Not always. Some of the stronger trends, they don't. And that's a good indication of how strong that trend is, all right? But unless you thought that this was just, a flash in the pan and we were going to be at new highs in another week at the pace we were going, okay, this would have been a perfect spot for a breather, little pull, a little consolidation, whatever, whatever they come up with. All right. So that was the game plan going into Monday, right? Easy. Don't go out there, especially some of the stuff that's extended already. You like something, our readings, our indicators are telling us to wait a couple days, let stuff cool off, and then at least you have a better entry, right? You don't want to go chasing green with the riffraff on a short-term tactical basis. So here we are, okay? And right now, at the end of today, everything that we were seeing into Friday's close has pretty much been washed out, okay? As a matter of fact, we'll see how things look when they update tonight. We might have a bullish signal. It's very possible, okay? And what that means is that the total opposite, right? Everyone went from bullish, oh shit, no, new lows coming, and they sort of trip over themselves to put on protection, and the bears get excited because they finally got some weakness and they see 2 days of it, and they start shorting into it, and it allows us, it brings us a setup for that snapback rally, okay? And that's what that tactical sentiment stuff indicates. It's not telling us big picture stuff like intermediate term sentiment, right? That stuff comes and goes in days in this market. All right, so the likelihood is if we're not there today at the close, any little weakness tomorrow will probably be there, okay, if we happen to have some weakness. And that's where you want to look for some opportunities on the long side, okay? If you're even looking to be even more tactical and day trade, and you want to stick to intraday stuff, that's primarily what I've been doing, right? I mentioned to you guys during at least the first quarter to half of earnings season, I don't really want to swing anything because now I have another risk, right? Like there's not enough risk out there with the virus and politics and Trump and this and that. Now I have earnings that's completely out of my control. All right. So I don't like to, me personally, I don't like to swing. I'm not an earnings player. I don't like to swing through earnings, and I don't trust the flow. So if that's the case, my main goal is to stick to intraday, day trade stuff until we start to get some post-earnings flow. All right. But even if you're looking for that, if you're looking towards that sort of style, all right, when we do have a setup like we have now, tomorrow, again, flat open, weak open, we could get a little more aggressive, okay, knowing that there's a higher probability of a decent squeeze coming, right? As opposed to where we were Monday, where there were higher odds of a wash coming, right? That's all it means. All right, so that's where we are today. As far as the overall activity is concerned, there are bets out there. It's a matter of trusting them or not. Okay, it's a matter of trusting them or not. Even if that name in particular that catches the action, right? Let's say XYZ catches a big bet, they may not have earnings, but somebody in the group could have earnings. I saw somebody just mention Pinterest is up off a snap. That didn't even enter my mind when Pinterest was catching that spec weekly action, So Pinterest didn't have earnings. It wasn't a play on Pin's earnings. It might have been a play on Snap's earnings or somebody else in the group that we're not going to think of all that stuff. So, that's the problem with earnings and earnings flow. That's the problem. I'm telling you, and it becomes commonplace now. I see names that never catch any sort of activity. If you get sweeper activity, never ever catch any flow of any substance. And then lo and behold, here comes earnings season, and right around their earnings date, it catches flow. And then you'll never see it again till next quarter. There are names notoriously known for doing that. All right, so it is what it is. That's why, again, I sound like a broken record, but especially to those who are members out there, all the action, you got to take it with a grain of salt, no matter the size, no matter what. You may still like it. You may still want to play a run-up. You may still think it could squeeze, and you don't have to even go near earnings, okay? But you still have to take it down a notch from what you would otherwise do if it wasn't earnings season. All right. And the spots too are what drive me nuts more than a sneeze. Good call, Tim. A sneeze is a mini squeeze. That's the new lingo. So, but what drives me nuts even more than that are the spots, right? When they hit a name, I'll give you another example here, MDB. All right. This thing catches two really nice sized bets yesterday. Okay. And it's not a name that catches big action. It really doesn't look awful as far as overextended, right? It doesn't look like your Teslas or whatever else went up, almost looking parabolic, some of these biotechs over the past 2 weeks, right? But she is, a little stretch, hence the Niner here, So maybe we get a little consolidation here, okay? And that's where you would want to revisit. Right? Maybe you get the pull, maybe you get some sideways price action, and then you can reevaluate, right? How the sector's looking, what's the rest of the flow looking, but it's all about not worrying about missing that opportunity, All right, as much as you may like that MDB action, there's probably going to be a ton of action, you know, all over the place when they show up when the time's right. You can't let it bother you. But if you do really like the name, you know, and I didn't pull the trigger, I really like the action, I might, you know, I might. If it hangs out here for a bit, and does something like this, you know, and these software names still are outperforming, and they very well may up until they report the bulk of them. You know, maybe it's worth a trade to new highs, and even more so you get a little lucky. You know, these things are unconscious right now. And this is a good name, you know, this is a great name. You had this ridiculous move, right? And then you sort of, same old thing. This thing comes down, reverses, and then it's at new highs without anybody even looking at it. And their earnings are further out there in June. All right. So the thing that's changed, the bottom line is, the thing that's changed from Sunday to now is that we don't have to be concerned about short-term tactical sentiment anymore. It's not cooked. You know what I mean? And you might be saying, are you kidding me? That's it? Yeah, that's it. But, you know, talk to somebody who bought Monday into Niner Green, right? And talk to them now about what they own from that point. And, you know, some names are down even more. Some names maybe not. But if you're playing options and you're playing them again, quote unquote, in a tactical way, right? So those are short-term strikes. These are the things that you need to pay attention to and try to fine tune, because entries mean a lot. You know, entries mean a lot. Yeah, exactly. You know, you buy into this Monday thinking, oh, you know what? Forget Jesus and that short-term sentiment crap. Niner, my ass. You know, this market's too strong right now. This thing's going higher. I'm chasing. I don't care if I look like riffraff doing it. All right? And Cash is right. You're talking to yourself right now. You're behind the 8 ball right now. And now we can get littered with, you know, sweepers, pretend it wasn't earnings, but we can get littered with good-looking action, and your head's so screwed up already because you chased and made the wrong move. So, you know, it's the little stuff like that, and options are tough enough. Let me leave it at that. Options are a difficult game to begin with. If you're going to think you're going to come in and just start throwing darts and buying every day, buying whatever you want, wherever you want, you know, the end of that story is not going to be something you're happy with. I can promise you that. Options are insanely difficult and ridiculous. All right. Anybody have any questions on short-term game plan before we'll talk about intermediate term? Nothing has changed there. But anybody have any questions on short-term? All right. And just to elaborate, well, maybe you guys are asking some questions here. You know, we don't want to get foolish either, okay? We want to look for these type of dips or consolidation off hotter sentiment when sentiment's against us. And we're playing just for that snapback, okay? You got to be careful trying to buy every little dip thinking that's just another entry, you know, for the larger trend. You know, they don't always work out like that. And with earnings season, it's going to make it even more difficult because we're not even going to have the flow as a guide. You know, but when you're trading off the short-term stuff, the squeezometer and all the short-term stuff we look at day to day, you're looking for an entry around here. And then when they keep the bears honest, right? The bears got excited. They start shorting, new lows coming, oil blew up. They're going to squeeze them. And that, you know, that's your opportunity. That's what you're looking to raise stop losses or trim into if you found that entry. Yeah, and that's a good point. I saw somebody else mention that. A lot of the sectors that have been strong, you know, as well as sentiment are cooked, have been cooked. So they could use a breather. You know, a lot of things out there could use a breather. I don't think we're going to see major rotation into the laggards until we get through earnings, in my opinion. Okay, that's just my opinion. In other words, I don't see them buying the economically sensitive stuff until they report their earnings. You know, they may be bad, they may sell them off, but they may want them there. You know, I don't see, if they've held off so to this point, you know, why would they start buying them now, you know, into the number? I just don't see it. You know, but that's another possibility, and that would be a great thing if and when we start to see rotation. So while some of the hot stuff, you know, breathe it out a little bit, you know, we got better setups out there to try to make some money off of. You know, so we'll see though. Yeah, it's a day by day thing, and we'll see. You know, the other thing to take into account too is, don't think a niner is death to all now. That doesn't, you know, that's not how it works. You know, the niner usually, most of the time, will bring a breather with it. But sometimes they're shorter lived. You know, sometimes they nail tops. Sometimes they just go sideways and chop around for a bit. You know, it all depends. It all depends. But, you know, the niner usually is a good, like here, see the Amazon niner back here? This nailed the top. That was February, though. The whole market nined out and rolled over from there with the virus. But if you look back, you know, some niners, here's a niner here, right? That was the first niner in an up move. Little breather. And then boom, here's another niner where nailed the top. So here's a good example, Amazon, in what, you know, what can translate off these niners. All right, but it tells you a lot about a stock. Like, in other words, you're going to see now, right, at Amazon, and again, we have earnings, so that presents a problem. But what my point I was trying to make is, you're going to see if there's any sellers in the stock here, right? If things comes in hard and rolls over with the rest of the market in the group, obviously that's not a good sign. But if they hang up here and you see these dips continue to get bought and it consolidates that way, that could be very constructive. Yeah. All right, let me see. I got a couple questions here. What are the strong sectors today that we should keep an eye on? Yeah, I don't really, right. Shippers, you know, were strong off the oil mess, right, the past couple of days. But prior to that, you know, the sectors we all like, for the most part, you know, retail likes, and were pretty obvious, were the hot ones. You had biotech, which was right up there with the best of them. You had software, right? Software and big tech. You had the stay-at-home stuff. You know, that's where a lot of the movement came. All the stuff that is economically sensitive, virus sensitive, you know, they had their squeeze and then they stalled out. Some of them even rolling over, some of them not even participating much in the rally. You know, so like, for example, like a cat, you know, had a nice rally, right? And you can see topped out a little earlier than the rest and has come in, you know, which could end up being a good thing, right? Could end up working out to be a nice one of these W type scenarios. But, you know, here's earnings right there, you know? So that's why I tell you guys, rather than jump the gun, you know, I'm trying to stick with just intraday stuff, and hold off until we see some earnings. You know, another group I'm interested to see how they look off earnings are the semis. That's my favorite group throughout my whole career. You know, if you can catch a start of a rally in the semis, there's not much better than that. So, you know, they haven't rallied as hard as everything else out there. And they were one of the leaders prior, right? The whole rally prior to that, they were one of the best sectors out there. You know, some of this stuff has just been hanging out, right? Except for your AMD, NVIDIA, you know, but as a group, right? Let's look at the SMH. See? So, you know, it looks interesting, right? Same thing almost like Caterpillar. You got the sell-off, look at that, niner bottom, niner high, right? You get a little breather here. And, you know, we start to see some post-earnings sweeper activity come in. That could be a real nice setup. That could be a real nice setup. And that's the play with the semis. What the play of the semis is, oh, wait, you buy them out of September, right? I think you buy them out of September, off the September-October correction into year-end. That's usually the play on the semis. But the TXN reported today. You know, I wanted to see, that was down today. I think it's up in the aftermarket. But look, you know, this hasn't gone anywhere too far yet. So that's what I mean. If, like, TXN tomorrow, let's say it's down, right? Or flat, hanging around here, as long as it's up, not up 5, and she catches, and she's known to catch missiles, right? We've played it several times, this TXN. I'm ready. I'm there. I'm a player. You know, so I got earnings out of the picture. They hit it post earnings. That's the stuff I'm looking more to swing right now. You know, that's the stuff I'm looking to swing. Yeah, airlines, all that stuff. You know, now we're getting. You got to get creative there. You know, you got to get creative there. Airlines and. Oh, they're dumping right this minute, you mean? Oh, I think you were talking about just in general buying them now. They're, you know, these things have big sellers in them, you know, for good reason. I already got enough this, you know, for this group, even though it's not an airline per se. I'm in Boeing Septembers, and I've watched profits disappear, come back, disappear. You know, I'm still hanging in there. But, you know, it's tough. Easier said than done, right? Trying to sit through these things. Yeah, you gotta, listen, if you're interested, right, the risk reward is there, right? You're buying these things. I hate airlines in general, but let's say Boeing in particular. The risk reward's there. If you're gonna buy some with time, you gotta close your eyes and you're not concerned about the moves short term. All right. So you're buying some Boeing, you're giving enough time so you don't have to worry about the ups and downs and where it goes over the next month or so. Okay. And you're buying it when not many people want to buy it. You know, for the most part, when you do that, usually works out quite well. Doesn't work out all the time, but for option trades, it's not a bad risk reward. But there's, you know, for short-term stuff, like the in-between trade, these things are impossible. They're really tough. You either got to try to be quick or tuck them away. In between, like trying to catch the large move over an intermediate time frame, that's where you'll get really frustrated because, you know, this thing is up and down and looks great one day, looks like shit the next. So the other airlines, I have no interest in. This stuff, I have zero interest in. I didn't like when these things, when the backdrop is totally bullish for airlines, I can't get myself to buy them. I'm going to buy them now. I have no interest in them. No interest. You know, I'd rather look towards like semis or something like that. What do I need this crap for? Yeah, they're not enticing. Like the semis, that's a group I like. You know, LRCX, they report this week. Oh, wait. Oh, yeah. It didn't come out yet. I thought it was coming out today. So, like, this is an animal, this LRCX. Yeah, let's see how they treat it post earnings. Yeah, let's see how they treated post earnings. So what are you guys looking at here? No, I didn't end up buying the TQQQ. I didn't even day trade off of it, which I usually do. I didn't even day trade off it. You know, I was interested. If they came back, JoJo, I told you I was going to take a stab for a sentiment squeeze, snapback squeeze. You know, but I didn't play it. I didn't play it. Take two, I'm still in. Yeah, take two, I'm still in. I sold some stuff, like I told you guys Sunday. I sold a few names. Some I regret already. You know, I regret already. You know, some of them end up being okay for now because the market's down a couple of days. But you know, I'm the worst selling. But I held take two. I'm still in that. I got time on those. You know, I held the Boeing. I also held the Trip. You know, those two I really didn't have profits on. So, you know, so I'm still in them. I actually added to some Trip. Oh, I told you guys that though, right? I told you guys that. Expedia was small stuff. They have earnings too. That's known to catch earnings flow. Trip caught some Sharpie activity with a lot of time though. With a lot of time. I have room to add one more time. I don't know if I want to in a name like Trip. I'm not a big fan of the stock. But if these guys come back and hit it again, I might. I might. Yeah, Take Two I've been in for quite a bit now. Take Two was one of the first names I bought. That was, where was that? Over here, I think. Yep. I think it was over here, not here. I think I was over here because I was underwater on them. I bought them over here. You remember when that size came in? You remember that size? Yeah. Honestly, John, I'm a little disappointed that I thought these things would get really, really hot because they were virus proof. I thought they would have a Netflix type phase with that they would go through. You know, instead you could see, right? Really choppy and grindy. ATVI too caught some nice action. A little bit better there, ATVI. Exactly, exactly. You know, not as smooth as some of the others. Not as smooth. Yeah, some of the other moves have been really smooth. Take Two, every day I feel like it's up $2-3, and then when I look by the close, it's flat or down every day. No, every day it seems. Yeah, probably. You're probably right. That's probably the reason. But I like this Take Two. I've always been a fan of it, and I've been wanting to get my hands on some with time forever. I missed some big rallies in this thing, or some real nice sweeper activity, so I had to get my hands on some of that big action that came in. What else? What names are you guys eyeing? Any names in particular you guys are eyeing off? Yeah, this Peloton's been really solid. You know, really solid. When do they report Peloton? Is this right? This date here, May 28th? I got May 28th. So you got some time there. Where was John? I think you and I were talking about it. Where was Peloton catching that action when we were talking about? Remember, it was one of the few catching action. Was that here or was that back here? I lose track of time. But I like this Peloton. Don't ask me why. I like the way it trades for some reason. But it looks interesting, right? Oh, that was back in November? Oh, that was back here. when it first came public. Jesus Christ almighty. Yeah, and you know what's funny about Peloton? Stay-at-home play, but for some reason wasn't being thrown into that basket. You know, it kind of just got ignored and shook a lot of people out. But then people finally noticed it. But yeah, clearly a stay-at-home play. They're pricey, but if you can't go to the gym. Now the question is, what do these stay-at-home plays, what do they look like when the economy starts to open up? That's the question. You know, that's what scares me about chasing, even off little breathers, chasing some of these big moves. You know, it's kind of late to the party. Where if the economy starts opening up, you might see that rotation into economically sensitive stuff. We might even see it prior to that. We might see it early. So that's why you got to be careful, you know, playing names and overstaying your welcome when you're a little late. When you're a little late. The semis I like. The semis aren't a stay-at-home play, you know, and they kind of been left behind. Well, not really left behind. They've lagged, you know, not NVIDIA. Look at these Niners. You realize there's literally Niners all over the place. I guess, listen, when you have SPY and the Qs, right, flash Niners, and coming out of a correction where a lot moves together, you're going to have Niners on anything that rallies. But there are Niners all over the place. All over the damn place. Oh, let me show you, by the way, let me show you today's action. There were a couple bets. Like I said, some catch earnings, but here's today's top bet list. Right? We spoke about Sunday, top bet list. So I always throw on here, and during earnings season, you have to be aware that they usually are earnings plays, and you know that already. Look at this. I sold this last week. SE. Look at that sweep. What a beast. So you got another good-looking sweep in SE. You have some time. Earnings May 19th. These are August 55 calls. Everybody I know is gassed up on this stock. Brokerage firm-wise. They love this thing. But it's a stay-at-home play, believe it or not. In Singapore, which is on major lockdown again, because the virus came back. But just everything about this order, you know, if you don't have earnings here, this is just a beautiful thing. Extended to June, Singapore, yeah. Yep. So a lot of us played this SE recently off very similar call sweeper activity, right? Just a little better spot. So you had here is where SE caught action, this digestion, and then bink, rally to new highs off a Niner, and now you have a little breather here, maybe before next leg up if they run it up to numbers. But look at this move. Look at it. You know, from where they initially hit it, and I had no idea what the hell they were, all the way back here. They've lit this thing up on dips. So May 19th, you may need to breathe it out here in the next few days. You may see something like this. It's known for it, where it stays in one of these things, right? Looks like it's going to break out. People chase, goes back down here. They shake them out. Up here, I'm not falling for it again. They think, and bink. But yeah, keep an eye on it. Another thing to keep an eye on this SE, even for not swing trading purposes, for intraday purposes. If this thing catches front month stuff, you know, the morning of, you could catch a nice move that day. So really, it's just been a great stock, a great stock. All right, so that was, in my opinion, top bet today. You had this NVIDIA, which was a $1.2 million sweep, lays crazy wood. Again, catches earnings, 514. If it didn't, this is a pretty impressive order. But, you know, we don't know if he ends up selling stock and he's replacing those calls with this. You know, during earnings season, there's higher risk of that. But big bet in NVIDIA, and she's a monster. There's no, right? There's nothing else you could say about NVIDIA. You look to buy dips, you got another one here. I think you buy dips for trades in the meantime. No, when's earnings? They're going to hold this thing up. May 7th? Yeah, May 7th. All right, niner low, bottom. Here's your niner high, a little tug. This might be, you got earnings there, but could be a secondary entry. Anyway, good looking Jan bet. And then another semi that reports sooner, 427. When's that? Next week? Next week. That's another good looking order. Jan 85s. Jan 85s. So you have two semis on the top bet list, and SE, which makes, SE makes video games? What does SE do? I keep forgetting what the hell they do. I think they make video games or something electronic for staying on. Mobile games? Okay. So mobile games. I don't know why I keep forgetting that. They do it all. You're right. Are you still in it, Steven? You still got some? SE? Me either. I sold it last week. Me either. What's CW's asking about? City repeat sweeper. Which one are you talking about? The weeklies? They were cheap weeklies in City. Is that what you're talking about, CW? Yeah, I don't really, you know, the weeklies, like I like to day trade that stuff. I don't swing trade weeklies. Hardly ever. Once in a while, maybe for a day or two, and I sell it regardless. But that's, you know, that's cheap spec stuff. And I don't know, are banks completely done reporting? Did everybody report in the banks? Yeah, I know what you're talking about. I know exactly what you're talking about. Those out of the money cheap weeklies. I know exactly what you're talking about. I really don't have an opinion on it, you know? I know they already reported. I'm saying, are all the major banks done? Wells Fargo reported, I think, right? Morgan Stanley reported. Because it could be just a play on somebody else, is what I'm saying. You know, or hedging or protecting or somebody else's earnings. So that it could be that. Yeah, that's why you got to be careful. You know, like the pins example, what I was making earlier. You know, even though Pinterest doesn't have earnings, you know, it moves with other things. Pinterest and Niner too, by the way. Look at all of them Niner. All of them Niners. You know, so, you know, I like to day trade them, and I day trade the equity, so it's a lot different. But, you know, you can day trade them too. You just, you have to be, you know, you have to treat them the same way when you're day trading options. You know, you can't, you know, expect everything to either turn into a big winner or, you know, you salvage some money. I mean, they're cheap weeklies for a reason. They're high risk, and your win ratio is not going to be as high as if, you know, you took a more prudent or a more conservative approach towards options. But getting back to your city, what I rather see a few good-looking sweeps with some time behind it. That's what I would like to see. You know, there's easier stuff to trade over extreme short-term basis like weeklies than these banks. These banks are, you pull your hair out of your head. You know what I mean? Like, you rather, instead of city, somebody come in and start sweeping NVIDIA weeklies into weakness, and then you can get a squeeze that day, the next day, and cash a ticket. This city can do this for the next 6 months. No, like these things are tough. So, like, for me, for the banks, I'm not even looking towards them. Like, I'm not dying to own a bank, but like I would have to see some really impressive flow with time for me to have an interest in these things. But on a short-term horizon, you know, I just, for what, a play to, like, I guess what you're saying, 48? I don't know. I really don't have an opinion. Yeah, right? Like Goldman Sachs, people, you know, back in the day, Goldman Sachs was good for that, right? Goldman Sachs was a big mover. It was a steady stock. Dips got bought. You know, these banks are a totally different animal now. Yeah, there's a lot of sellers in these banks. So you kind of, the only way to play them, in my opinion, is if, you know, you catch that reversal when you're buying them when they're out of favor and you give yourself enough time, you know, catch that bounce or squeeze, you know. That's the only allure there for me. But they're tough. They're tough. Crowd, yeah. Crowd, you know, we talked about Crowd on the last few webinars, right? Crowd really took its time, right? Then here's an example like the MDB, was it? What was the one I mentioned earlier? The one that caught the two good-looking orders, you know, the software name? Here's something similar to it, right? So you have this rally, here's a 9er low, and look, 9er high, right? So, you know, even though, you know, it's nothing, it didn't go parabolic, right? It looked like it needed to rest, and you had a little rest here, you know? And this thing moves around. This is $3, $4 trading range. Really can move for the price of the stock. So, you know, you had ample opportunity here to jump back in and shorten that time horizon. And that's what, you know, that's what a lot of us did, right? We played it, and I didn't even, this is another one I didn't have for yesterday. I sold last week. I missed the big up 3 day. 4, 5. What was she up? 5, 6? You know, but this is a good example of the Niners, right? Sometimes the stronger trends, they'll run right through it, but for the most part, at least this happens from my experience. Some of the stronger trends, you'll see a Niner they blow through, and then maybe the second Niner will get them. But at least this, you know, where buyers get tired a little bit. And in options, if you can avoid this, if you're playing short-term stuff, you want to, right? If you can avoid that sitting through this. So that's the name of the game. But yeah, this looks good. I wouldn't chase it. And, you know, if it hangs out here, does one of these things, and they hit it again, then maybe. But, you know, I wouldn't from here start buying up here now because it's catching more flow. There's no reason to do that. You know, if you're in it and holding, that's a different story. You hang on. What else you guys got? Yeah, AMD. Well, AMD's already moved, so But now you got a dip, right? That opens up opportunity. Pullbacks open the window of opportunity. So if you talk to me Sunday, you know, I would have brushed you off immediately with AMD and say, listen, you can't, you know, it's stretched here. That's it. It's done. I don't care how much action it catches here. They're likely rolling. You know, it did its job. This thing's a beast. Again, you have earnings, so watch for that. But now you got a little bit of a pull. You start to see some aggressive activity or a really nice order come in. You know, that would be your entry for quote unquote trade. You know, but you have earnings here, so you don't have much time. Next week. Next week is earnings, the 28th. This has been impressive, this stock. REGN, that's an animal. What are you going to do with this now? You got Pink Panther bars all over here. You know, now it's tough. Are you talking about buying the reversal for a trade type thing? I don't know what you do. You know, you're going to be in the hands of the drug gods soon, or whatever they're coming out with. What are they coming out with? Some antibody thing, right? Yeah. But, you know, at this point now, dog, the most that I would do is probably look for dips and try to catch bounce backs because it's such a strong name. But you always run the risk up here of these reversals. Like mRNA finally had a reversal, didn't it? I think. Oh, it came back a little bit. You know, mRNA. And you see, it does this, right? Someone, look what it did here after that big pop. Whole lot of congestion, and then went back again. You guys know, we want to be buyers in here when flow indicates to us that they may be coming out. You know, that's where the money's made. Buying here, you got to be quick. You know, buying up here, you got to be quick. Because you may get a little more upside, but then when that rewash comes, it comes so fast, you may not even know what happened. You know, when it's tight and choppy and not doing anything and playing dead, that's when you want to own it. When they catch sweeper activity, because one, you can get these little pops and trade those, or you know, you got at least a better spot to hold for a bigger move. But up there, it's dangerous. Your downside is even more riskier than, you know, upside. Yeah, and that's the thing. You can't get wrapped up in the sweeps. Because what happens, guys, when this trend happens like this, okay, with these powerful stocks that perform well, right? So here's what happened with mRNA. The initial activity was here, okay? Popped here, right? Then came into this base, and they were sweeping into this base, right? Sweeping here, sweeping here. Now up here, you see more sweeper activity. But we have no idea what all these orders are doing, right? They could be closing those orders, right? All those sweeps that we saw, and there were a lot of them, we have no clue what they're doing with that stuff. So you see a $1.6 million sweep up here in mRNA. That could be a dude who put in 300,000 down here, and it's worth 4 million, and he's only putting 1/6 of it back in there. You understand? That's why the initial activity is so important. That initial bet, that's where you want to be around. because it's clean. That's where the action started. Because for the most part, the smart money that sweep, they're not sweeping up here extended like this. They wait for breathers or pullback. They buy them before everybody else is talking about them. When I enter a position based on wise guy activity, do you do the same expiration or short term? It depends. It all depends on, what line they sweep. Sometimes they'll sweep a line close or deep in the money, and I don't follow that exact line, But I want to be, for the most part, I want to be in the same vicinity month-wise. You know what I mean? So if they're sweeping Jans, I don't want to sweep front monthlies. I don't want to buy for myself front month monthlies unless I'm just day trading off the momentum of it, but I utilize the equity to do that. I don't play the options that way. But when I swing trade options, I'm usually at least in the same month that they're hitting. You want to be close. You don't have to be exact, but you want to be close to what they're doing. So you're on the same page. But I for the most part, I like to swing trade with time. I don't like to swing trade weeklies and stuff like that with options. A lot of times I just buy the equity to do that with. JNUG, I don't have much of an opinion on JNUG. I haven't seen any notable flow of recent in it. What the hell happened to JNUG? This is JNUG down there? Oh shit, I didn't know that. There's gold, GOLD, the stock. Barrick Gold. Caught a little weekly activity today, which was strange, and some May monthlies. There's been a lot of good-looking action in this gold, this miner. You do have a niner up here. But it doesn't look like much selling there so far. Here was the last niner. Right over here. But yeah, the miners, I'm not a big miner guy. Home Depot, this is another name I had my eye on. But earnings are later in May. What did Costco end up doing? Pull? Oh, look at pullbacks, open opportunities, my friend. I didn't even see that. And I played it. I had it. I don't have it anymore. So like Costco, this is what you got to love about pullbacks. If you're looking to play tactical right now during earnings season, Costco, is down a little off the open tomorrow or dead and catches a sweep just like it did over here. Oh no, that was the Friday, right here. The day before, this was Monday, the day, right? Or over here, this is where I played it. I didn't even play that Friday one. So this was a pullback in Costco, and they hit it, and this same thing here. So if you see sweeper activity, that's where you want to find an entry. And then, again, you don't, unless it's according to a different game plan that you're looking at, right? Maybe you're looking at Fibonacci's or something. But off the flow, you're playing for that snapback. You may catch it in a day. Maybe you want to hold it the next day, see if there's follow through, but you're playing for that snapback rally. And when you're buying off pullbacks, they could be rewarding at times. Yeah, Walmart has had a lot of flow, just spread out more, you know, not one particular good looking order, but just more spread out. But, you know, this is, for me, like, I'm not interested here now in Walmart. It's had a nice move. Yeah, exactly. I would wait for a pull or some digestion at least. At least. You know, some of the big guys out there, what's going on? Google and all them, they're holding up well, I guess. Oh, Google. Oh, you're going to have earnings soon, right, Google? End of the month? When is it? The 27th? There's your Niner. CRM heavy made put buying today, yeah. I wonder what that's about. I don't know if there's probably a major software name reporting by then, but I don't know who. CRM, another Niner. So many. I don't remember seeing this many Niners all in one group, like all of tech. Did Apple have a Niner? Oh my God. Everybody had Niners. So that's why, you know, that's why these things have to breathe it out, either chop around or pull. They already started the process. You know, and we either get rotation or we're hoping for buyers into the breather. That's all. You know, we're hoping for buyers into the breather. But yeah, so the moral of the story is, as difficult as it is, right? We spoke about it Sunday, but you know, me too. I'm itching. Yesterday I wanted to buy something, right? I raised cash. Today I wanted to buy something, but I got to try to find it within me to sit tight and, you know, wait for better opportunity. That's all. Now, I'm almost inclined now to make a play on the overall market than individual names, because I'm so uncomfortable in individual names now with earnings. I don't trust much. That's the problem, you know? I don't trust much. I don't trust much as far as the flow is concerned. And then you know what's another risk? What about you're buying? You know, we said, let's say you buy one of these names off a pull, right? And there's a market bounce, but they rotate into a different sector, and that thing doesn't bounce with the market or lag significantly. You know, that's frustrating. And there's a risk of that. You know, maybe a tech name didn't have so hot earnings in the group, and it's weighing on the whole sector, and you own a name in that sector, and even though the market's rallying, you know, you're not participating. That's so annoying. So annoying. Yeah, Joe, I'm more inclined to lean towards the market right now until we get some earnings out of the way. You know, because I feel the same way. I feel the same way. Work, yeah, work. You know, we've talked about work. I liked work for a while. Looks good. Looks good. You know, had a nice rally, the dip here, back testing those highs. She's a little choppy, but when the flow heats up there, she does well. Yeah, choppy, really choppy stock. Really choppy. And the moves are decent. You know, that's the thing. Like, the moves are decent. So if you're not greedy in it, and you're not looking for that big move, you know, you can make money with this thing, trading this thing. But, you know, if you're looking for that larger move, it could get frustrating in this stock, no doubt. Space, I don't know. I don't even pay attention to the flow anymore in that thing, to be honest. You know, there's so much damn riffraff money in that thing. I don't really even pay attention to it. I know, oh no, it caught a put sweeper today, not a call sweeper. I think it had bearish activity for earnings. Space. Decent sized put buyer. You know, Beyond, that was up big today too, I heard. And oh, reversed. Beyond. Try to run through a niner. She yanked it back. No, the Sharpies are net long as of last week. We get another update Friday. And this Friday, I think this Friday's update's more important than last week's. If, again, we don't know, this market can, this week can end up turning into an up week. But if this week is a somewhat down week, Senate passed the bill. Yeah, they were saying they were going to do that, right? Is it moving ES at all? Oh, it's closed ES, right? What time is it? 5:30. What was I saying now? Oh, if we get a subpar week, I'm interested to see, you know, the Sharpie riffraff positioning off that. Because if everything's still a go, then we, you know, I don't know about you guys, but me, I probably look just to make a play on the overall market. Nothing crazy, you know, unless we get a decent breather. But you know, they've been long now for like 3-4 weeks, so I want to see off a pullback. You know, I don't want to see the market pull back, and then we get a Friday update that they're slapping hedges back on. You know, and I put on a long already ahead of time on the market. So I want to see if we have a down week, net down week Friday, if they're still long. Even if we get it maybe before the close, I'll look to take a shot on SPY or something. Qs. You know, given the tactical trader sentiment in the red, are you positioning more puts? Well, I don't position in puts ever. The only time you'll ever see me touch puts is to protect my longs if I got caught overextended. But I'm not playing the downside. I play the long side, and when I'm not supposed to be playing the long side, like when tactical sentiment is in the red zone, I wait for it to set up. Yeah, it keeps me disciplined more than anything else. It just keeps me disciplined. You know, I got enough action. I don't need to be playing everything my eyeballs are on. You know, I've had the market goes up more than it goes down. You know, I mean, I've made my living, my career off shorties getting run over. You know, that's like my bread and butter. So why would I even entertain that? You know, so that's my so yeah, when tactical sentiment showing signs of caution or Niners, I do what I did last week, what I was telling you guys. You know, I raise some cash. I don't panic and sell everything off tactical sentiment, but I raise some cash, and you know, I wait for a better setup, and then I'm ready to take advantage of that whenever I feel comfortable. You know, if I go short, you know, then I got to manage those positions and worry about that. And it's all fine and dandy if I'm making money. But if I'm not, I got a lot of emotion wrapped up. And then I got to flip to the complete other side. Very difficult. Yeah, very difficult. So it keeps me in check. It keeps me disciplined. Like, look, a day like today, I didn't play anything because for me, there wasn't anything too exciting to get long. So a lot of players out there, when they can't find something to get long, what do? They get short. That doesn't mean that's the right trade, right? So keeps me patient, keeps me disciplined, and it allows me to wait for better setups. I've been doing that my whole career now, so. And mentally saying, you're right. John, I've seen too many people get blown up on the short side. I told you guys, the two things I've seen people blow their accounts off of were margin and shorts. Everybody else who didn't get involved in those two things hung around long enough to figure out a way to make some money. So I was blessed early on in my career by the unfortunate situation of others seeing that around me. So, prevented me from doing it myself. I came into, I really got like my hands dirty in this game in 1998. And I saw, everybody around me blow up on margin. Everybody. And then coming out of 98, I saw everybody around me get blown up shorting into the 1999 rally. And then in 2000, the following year, I saw everybody get blown up margin to the hilt and internet stocks. And it's the same cycle over and over and over again. But most people who didn't get involved in those two things, there's a good possibility they're still around. Everybody wanted to swing for the fences, Joe. Everybody wants that big trade. But yeah, the long side is tough. The short side, tough is an understatement. The long side is extremely difficult. Forget about the short side. And the market goes up a hell of a lot more than it goes down. And you see, even when the market goes down, how impossible it is. And you're gonna know early on if you're built, what you're built for in this game. You're gonna know how you're wired. You get all the answers in this game. It's the ability to pay attention, listen to them, and avoid and correct mistakes along the way. That's the whole trick. All the answers are all going to be there for you. The market's going to tell you what you can and can't do. That's a given. It's going to tell you, don't play earnings. You're not meant to do this. You're not meant to do that. You're a piker. Stay away from that. It's brutally honest, the market. But if you fight it, it costs you money. It's only money, but it costs you money. But it's only money. It's only money, my friends. All right, everybody. It's always a pleasure. All right, we'll see how this thing opens up mañana Looks like some good earnings. I guess, are they holding on? I don't know. But if we do get a flattish to red open, we try to look for some stuff for a snapback squeeze. All right. And for those of you who are members, let's see how tactical sentiment, some of that short-term sentiment lines up off this weakness today. We should be close. All right. Enjoy the night, everybody. I'll see you guys the rest of the week.